Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar and from the United States, for the coming week, we will be waiting for the following economic headers to be released: the pending home sales on Monday and CB consumer confidence for month of December on Tuesday. And on Thursday, we'll be waiting for the employment data, and on Friday, we'll be waiting for the ISM manufacturing PMI. That's all for the economic calendar for the coming week. We'll move on now to the numbers. On the last week, gold traded between 1478 as a low of the week to 1515 as a high of the week. Numbers are rounded and the market is closed. On the last trading session of Friday, gold spot printed a closing price above 1510. The numbers rounded and the market is closed. Gold is trading in an bullish trend and it's above its all daily simple moving averages, and in terms of the momentum, it's seen strengthening. For the RSI readings, it's moderate in all the charts except the daily chart. It's overbought, and for the supports are seen about 1505, then 1500, and then 1496. For the resistance levels are seen about 1515.45, then 1530, and then 1556. That's all for the numbers. We'll move on now to the trading strategy. Hi again. In our last video, we explained the phases a steep rally like the one that we are having the US equities could go through. We have labeled the current stage of the rally with the name the paradigm shift stage. We said into such stage, usually the market participants are completely blind, completely convinced that the prices of the stocks are not going to go down. And we said if our analysis is holding up to be true, we are going to see a top forming sometime near and a dip taking place. For gold, we said our calculation for the cycle shows that gold is ready to advance, and the 1500 is clear, then gold is a buy, because that is a very bullish sign and a very clear confirmation that we are into a rally, not in some sort of an upswing trade. Our analysis was partially true, especially for gold. Gold actually moved higher and reached almost 1515 on the spot rate. Equities made brand new highs, but still seen as if they are looking for the proper place to print their highest high of the rally, which we are not supposed actually to see it again for quite some time, because you don't need actually to go to a business school to understand this. It's a very simple rule of nature. After a sharp move to the upside, there should be a sharp move to the downside. Back to our main topic, gold. As I've just said, gold is in a rally, and that's confirmed by now. Gold is a buy on dips. Any dip, the bigger is the better. If you were to ask me, I see there is still some strength in gold, that it could pierce through 15.45 tough multi-weeks resistance. And if so, and if this resistance is cleared, the route is open to 1530. From there, we may or we may not see a significant dip toward 15.45 for a double test. And then gold is supposed to be rallying steadily on the back of a correction in the stocks market, which is supposed to last for a couple of months. That is a scenario. Call it scenario A. Scenario B is that gold dips from the current prices and retests 1500 again, then rallies steadily. In both cases, you are advised to buy the dip and to avoid shorting. You do have to remember that the stocks have moved sharply to the upside and avoided all the technicalities and the market norms and the fundamentals, and everything that we have studied in the business school is not applicable on the most recent rally in the stocks market. That is because simply the rally was meant for some political reasons. It's a bullshit rally. It's just meant to overvalue the stock prices for some political reasons, most likely. And it was funded by the taxpayers' money and sponsored by the biggest bankrupted organization in the whole world, the Federal Reserve Bank of the United States. And what do you need to know, or what do you need to keep in your mind? That after a sharp move to the upside, there's only one thing to expect: a sharp move to the downside. And this is what is going to happen to the stocks in the United States. That's why you don't short gold, buy the dips. And I wish you a very nice new year and a very nice rally in both gold and silver. We'll see you next week in another video.